Warren Buffett's investment strategies have fascinated the financial world for years due to the enormous wealth he's accumulated through his stocks. Here are 5 stocks that he's invested in that are currently performing well that you may want to consider adding to your portfolio. A key point to note here is that we're not just blindly following Warren Buffett, which we see a lot of on social media. We're using our own analysis to spot potential opportunities. This is where our 4-phase sequence method comes in handy, and we'll see how it applies to each of these stocks. Let's kick things off with American Express. Buffett first bought shares of American Express way back in 1991. Now, this wasn't just a random pick. The company had been hit by fraudulent charges and its stock price had taken a nosedive. But Buffett saw something others didn't: value in the company's strong brand and loyal customer base. Fast forward to today, and that initial $1.3 billion investment has grown to a stake worth over $38 billion. That's a massive 21% ownership of the company. And get this, in 2023 alone, Berkshire Hathaway received around $352 million in dividends from American Express. This long-term hold demonstrates Buffett's patience and confidence in the company's fundamentals. Now, let's take a look at the charts. Between 2020 and 2022, American Express climbed an impressive 198%, soaring from $67 to almost $200. This is a perfect example of phase 1 of our 4PS method, identifying a stock with a proven performance history. Then we saw a period of sideways movement, what we call a consolidation, from February 2022 to December 2023. This is crucial because it sets the stage for what comes next. This consolidation period aligns perfectly with phase 2 of our 4PS method. In January 2024, we saw a breakout. The stock broke out from its consolidation pattern and it hasn't looked back since. This breakout confirms phase 3 of our 4PS method. It's climbed around 40% in 2024, reaching about $280. This climb represents phase 4, entering at the start of a new major uptrend. Now, here's what I'm watching for: a move through $300. That would be a significant milestone and could signal a trend continuation towards $400 or even $500. Remember, these levels aren't just random numbers. They represent psychological barriers and potential resistance points that, once broken, can lead to substantial moves up. Next up is Apple. Buffett's relationship with Apple is fascinating because it's not his typical play. He started investing in May 2016, which was somewhat out of character for a guy who usually avoided tech companies. But Buffett recognized the power of Apple's ecosystem and its die-hard customer base. This shows that even seasoned investors can adapt to their strategies when they spot a truly exceptional opportunity. The numbers here are staggering. By the third quarter of 2018, Berkshire owned over 1 billion shares of Apple. But here's where it gets really interesting and where we learn a valuable lesson. In early 2024, Berkshire Hathaway sold a significant portion of its Apple stake. The move cost them billions in potential gains when the stock soon reversed to new all-time highs. This is a perfect example of why we need to follow the chart, not just what our favorite investors or influencers do. Even the Oracle of Omaha can make moves that don't pan out. It's a reminder that no investor, no matter how successful, is infallible. This is why having a systematic approach like our 4PS method can be so valuable. Looking at Apple's chart, we see a massive 415% climb between January 2019 and January 2022, from $35 to $183. This represents phase 1 of our method, a strong performance history. Then we had that sideways action until May 2024, which aligns with phase 2. This was followed by a breakout in June, phase 3, and since then it's climbed another 18%, which is currently phase 4. Right now, Apple's forming a base since July. It initially fell about 17%, but has recovered and is close to breaking out and setting new record highs. If we see that breakout, it could offer an entry point. I'm looking at targets of $300 in the short term, but over the next 12 to 18 months, $500 isn't out of the question. Now, let's talk about a true Buffett classic, Coca-Cola. Buffett's been holding Coca-Cola shares since 1988. This investment is like the poster child for his strategy of buying and holding stocks with strong brand loyalty and global appeal. Berkshire Hathaway currently holds 400 million shares of Coca-Cola, about 9.28% of the company. The stake is valued at nearly $28 billion. Buffett's initial investment was around $1.3 billion. In about 36 years, the value has grown more than 18 times. That's the power of focusing on long-term trends. It's a prime example of how patience and a focus on quality can lead to extraordinary returns over time. Looking at Coca-Cola's chart, we see an 85% climb from the March 2020 low to the April 2022 high. This represents phase 1 of our 4PS method. Then we had the sideways market until July 2024, which was phase 2, followed by a breakout in August, which is phase 3. It's climbed about 9% to its all-time high in September, but is currently forming another base. This could be setting up for another phase 4 entry point. At around $70, the stock looks cheap, and this new uptrend is still fresh. We could be looking at $100 on the next breakout. But a word of caution, while Coca-Cola does climb, it's been a slow mover with some deep declines since 2009. We want to see a more linear trend form, similar to what we saw back in the 80s and 90s. That's when we want to borrow the old slogan and when we will consider it the real thing. This highlights the importance of not just identifying strong companies, but also timing your entries effectively. Next up is T-Mobile, which Buffett got into indirectly. He first bought shares of Sprint in 2018, which later merged with T-Mobile in April 2020. So technically, Buffett's been holding T-Mobile stocks directly since the merger. Berkshire Hathaway currently holds about 4.7 million shares of T-Mobile, valued at around $1 billion. That's grown from an initial investment of $550 million, an 84% increase. Not too shabby at all. Looking at T-Mobile's chart, we see an almost 200% climb from its IPO price of $50.20 in 2007 to the high of 2021 at around $150. This long-term growth trend satisfies phase 1 of our 4PS method. Then we had that sideways market from July 2021 to November 2023, which is phase 2. Followed by a breakout in December 2023, which is phase 3, and since then it's climbed about 40% to its all-time high in 2024, representing a strong phase 4 trend. T-Mobile has been a solid performer this year. If the trend continues, we could be looking at a target of $300. That's the power of identifying strong trends and riding them out. It's a prime example of how our 4PS method can help identify and capitalize on significant market moves. Next up is MasterCard. Buffett first bought MasterCard shares in 2011, marking a significant move into the payment processing sector. He currently holds around $2 billion worth of shares, which is less than 1% of Berkshire Hathaway's portfolio. MasterCard's chart is truly impressive. We're talking about a 3,450% climb between the 2009 low and the 2021 high. This extraordinary long-term performance exemplifies phase 1 of our method. Then we saw that sideways market from April 2021 to November 2023, which is phase 2, followed by a breakout in December 2023, which is phase 3 breakout. Since then, it's climbed about 21% to its all-time high, showcasing a strong phase 4 trend. MasterCard recently crossed the $500 milestone. If it holds above this level, we could be looking at $1,000 over the long term. As mentioned already, these round number levels often act as psychological barriers, and breaking through them can lead to accelerated moves. And while we're on the subject, keep an eye on Visa too. It's also in Buffett's portfolio and often plays catch up with MasterCard. Visa is currently trading inside a consolidation since March 2024, while MasterCard broke out of its own consolidation in September and has climbed about 4% since. Visa is likely to follow suit, and if it does, it could target $500 over the medium to long term. This relationship between Visa and MasterCard is a great example of how understanding sector dynamics can provide additional insights for your investment decisions. As seen with stocks like American Express, Apple, and MasterCard, finding strong companies and buying them at the right time can lead to significant gains. Alibaba might be another stock with potential for long-term growth. It recently surged 60% and is trading back above $100 again. Click to watch this video for an in-depth analysis to decide if Alibaba should be on your watch list.